Welcome to Telenews. The United Arab Emirates, situated in the southeast of the Arabian Peninsula, shares its borders with the Persian Gulf to the north, Oman to the east, and Saudi Arabia to the south and west. It is a constitutional federation comprising 7 emirates: Abu Dhabi, Dubai, Sharjah, Ajman, Al Quwain, Ras Al Khaimah, and Fujairah. The federation was officially established on the 2nd of December 1971, with Abu Dhabi serving as its capital. Arabic is the official language of the United Arab Emirates, while English is widely spoken and used in business, and the currency is the United Arab Emirates dirham. The UAE boasts a well-established infrastructure, a stable political system, and one of the most liberal trade regimes in the Gulf region. It continues to be increasingly important, relevant, and attractive to businesses from around the world, as a place to do business, and as a hub for the region and beyond. The United Arab Emirates is also one of the best examples in
the region of an economy that has successfully diversified away from reliance on the energy sector, with a significant proportion of the gross domestic product now derived from non-oil revenues. Regarding personal income tax, there is currently no personal income tax in the United Arab Emirates. Consequently, there are no individual tax registration or reporting obligations. Under the Federal Decree Law No. 47 of 2022 on the Taxation on Corporations and Businesses (UACT Law), natural persons who conduct a business or business activity in the United Arab Emirates will be subject to UACT at 9% if their total turnover from such activities exceeds 1 million UAE dirham. It's important to note that wages, personal investment income, and real estate investment income are not considered for determining this turnover. Since there is no personal income tax, employers have no payroll tax withholding obligation. The UAE also has a social security regime that applies only to qualifying UAE and other GCC national employees. Non-GCC nationals are not subject to social security in the United Arab Emirates. Moving on to corporate tax. The UAE federal corporate tax was introduced in 2022 and will apply to taxpayers' financial years starting on or after June 1, 2023. UAE corporate tax is applicable across all Emirates and applies to all business and commercial activities, subject to certain exceptions. Transfer pricing rules and documentation requirements are also part of the UAE corporate tax regime, with the Federal Tax Authority responsible for its administration, collection, and enforcement. Under the Emirate-level tax decrees, income tax is payable under a progressive rate system, with rates up to 55%. However, in practice, these tax decrees have not been applied. Instead, branches of foreign banks are subject to income tax at a flat rate of 20% under separate Emirate-level bank decrees. Compan Eyes engaged in UAE oil and gas and petrochemical activities are subject to income tax at varying rates under their individual UAE concession agreements or fiscal letters. The federal UAE corporate tax law, effective for each taxable person's new financial year beginning on or after June 1, 2023, applies across all Emirates and to all business and commercial activities, except for UAE-controlled entities and owners being exempt persons, etc. UAE corporate tax is applicable at a rate of 0% if the taxable income does not exceed 375,000 UAE dirham aid or if it is a qualifying income of a qualifying free zone person KESP. In other cases, the standard rate of corporate income tax is 9%. Under the UAE corporate tax law, companies and other juridical persons incorporated or otherwise formed or recognized under the laws of the United Arab Emirates are considered resident persons. This includes juridical persons incorporated in the United Arab Emirates under either MI/NAN legislation or applicable free zone regulations. Foreign companies and other juridical persons may also be treated as resident persons for corporate tax purposes if they are effectively managed and controlled in the United Arab Emirates. Let's explore value-added tax VAT. VAT was introduced in the United Arab Emirates on January 1, 2018. The general VAT rate is 5% and applies to most goods and services, with some goods and services subject to a 0% rate or an exemption from VAT under specific conditions. The 0% VAT rate applies to goods and services exported outside the VAT implementing Gulf Cooperation Council member states, international transportation, the supply of crude oil or natural gas, the first supply of residential real estate, and some specific areas such as healthcare and education. A VAT exemption applies to certain financial services, as well as to the subsequent supply of residential real estate. Additionally, transactions in bare land in domestic passenger transport are exempt from VAT. Certain transactions in goods between companies established in UAE designated free zones (DISS) may not be subject to VAT. However, the supply of services within DISS is subject to VAT in accordance with the general application of the UAE VAT legislation. For UAE resident businesses, the mandatory VAT registration threshold is AID 375,000, and the voluntary registration threshold is AID 187,500. No registration threshold applies to non-resident businesses making supplies on which UAE VAT is required to be charged. VAT grouping is allowed, provided certain conditions are met. That's all for today. For watching.